Good day and welcome to Naija and Crude's Let's Talk Politics, the program where we unpack big geopolitical moves and trace exactly how they ripple through Nigeria and across Africa. Today we turn our attention to Washington, where President Donald Trump, now back in the White House, has rolled out a fresh wave of aggressive tariff measures. These include a sweeping expansion of reciprocal tariffs, hefty levies tied to national security and foreign policy goals, plus headline-making proposals targeting chips, energy, and other strategic imports. So how could this reshape Nigeria's export fortunes, African trade relationships, and the continent's broader economic strategy? Let's break it down step by step. The White House recently formalized a set of tariff actions under new executive orders that raise a baseline, reciprocal tariff, and broaden the use of tariffs as a geopolitical lever. This move creates new minimum rates and opens the door for significantly higher duties on selected trading partners. According to administration messaging, these tariffs are framed as essential for U.S. national security, with aims like discouraging purchases of discounted Russian oil or compelling companies to relocate critical manufacturing, such as semiconductors, back to American soil. The rollout, however, has been far from smooth. Some countries have been hit with steep rates. Reports mention figures as high as 35 to 50% for certain partners, prompting a global lobbying frenzy in Washington. Some reprieves and targeted exemptions have been issued as the details are still being ironed out. Analysts caution that these measures will sharply raise U.S. effective tariff rates and cause significant disruption to global supply chains. Yet they also note that the policy offers no strong guarantee that production, particularly of advanced tech like chips, will genuinely return to the U.S. in large numbers. So why should Africa and Nigeria care in general? When the US tariff raise costs and create friction with major trade partners, global trade flows shift. That can reduce demand for African intermediates and raw materials embedded in global value chains, or even place African exporters in the middle of geopolitical bargaining games. Tariffs meant to block or discourage purchases of cheaper Russian crude can shake up oil trade lanes. For Nigeria, a major crude exporter, that could mean sudden shifts in demand, new buyers looking for alternatives, and volatile revenue streams that complicate fiscal planning. As companies rethink sourcing and factory locations, some may seek new bases. Nigeria could benefit if it positions itself as an attractive relocation option, but there's a flip side. Many firms will avoid high-risk environments and might offer only token investment to gain exemptions. The tariff blitz has forced many governments into urgent lobbying campaigns. African countries with limited diplomatic networks in Washington risk being sidelined or paying the price for slow responses. So what can Nigeria and other African nations do or should do? Seek immediate clarity and carve-outs. Quickly engage diplomatic channels to secure exemptions or transitional periods for vital exports like agricultural products and critical minerals. Collaborate with other affected nations to strengthen negotiating power. Identify export sectors heavily dependent on U.S. demand or supply chains and prepare backup plans, from finding new buyers to stockpiling goods or shifting trade routes. Focus on processing, refining, and assembling locally so exports are less exposed to commodity-only tariff risk. Stronger regional markets can help absorb shocks and boost bargaining leverage. Compete for relocation of less sensitive manufacturing by offering stability, incentives, and quick regulatory approvals, but demand genuine technology transfer and job creation. Invest in skills, infrastructure, and sector-specific strategies, from agro-processing and mineral beneficiation to renewable energy, to move Africa beyond low-end supplier status. Align with middle powers and multilateral forums to challenge overreaching tariffs. Seek WTO remedies where possible, and develop shared trade insurance or risk-sharing mechanisms. President Trump's tariff offensive is not just a U.S. economic story, it's a high-stakes geopolitical maneuver that will alter trade lanes, investment decisions, and diplomatic priorities worldwide. For Nigeria and Africa, the response must be twofold: act defensively in the short term to protect current exports, and push harder for structural changes that add value locally, diversify markets, and solidify AfCFTA ambitions. This disruption can be turned into a strategic opportunity, but only if African leaders move quickly, think beyond short-term concessions, and focus on manufacturing, skills development, and sustainable economic resilience. Thanks for joining us on Naija News. Let's Talk Politics. Until next time, stay informed, stay tuned.